In this video, traders, I'm going to talk about mean reversion versus trending. Stay tuned. Hey guys, warm welcome to you. All right, so when you are starting out trading, or when you're kind of finding your feet, you're like, okay, well, I want a strategy that works. I want to get something that I really can get my teeth stuck into. And very often the decision comes, do I want to be trading a trend or do I want to be trading mean reversion? Mean reversion being I'm trading a stretch market, let's say to the upside, for a move back to a mean. And that could be, if you're swing trading, it might be a moving average. It might be a breakout point, like a support level. It might be, if you're trading intraday, a VWAP, an open, a prior level, something like that. So it's kind of a stretch and a pullback. If you imagine the Bollinger Band trade, very much mean reversion type trade, setting at the upper Bollinger Band, buying at the lower Bollinger Band, closing it out in the middle. Trend type trade is waiting for that momentum and buying a pullback and a continuation. Now the pros of both are this. On a trend day, the profits can be substantial. If you have that momentum ignition, you catch it early and you get on it, then you can get many times your risk, because if you've got a great entry, you're capping the risk, you've got a sweet spot, you find the sweet spot and you can let it run, then fantastic trades. The downside is with the trending trades is that we don't often get trend days. We don't often get trends. Now, I'm talking more from a shorter term perspective. Swing trading, it's slightly different. But if we're taking a short term perspective, how many trend days do we get? Not that many, guys. We probably get 2 or 3, if that, in a month. Real trend days, like opening at the low, closing at the high, opening at the high, closing at the low. Obviously, it depends on the seasonality and it depends on what's going on in the global news flow, etc. But that's a rough estimate. But really what we can say is most of the time we're getting mean reversion. Now, I like trading both because I like the fact if you get on a trend day, leave it and just wait and come back, and then you've got to, you don't know where it's going to go. If your thesis is right, you could have a monster day. But I like mean reversion because that's very much seeing where the turn is, and that is something that happens regularly. Most days we're going to get probes to highs, probes to lows, probes to prior highs, should I say, prior lows, etc. Fails, rotations. We get that, and as a intraday trader, that's something you can really grab onto. So, and it's similar as well, guys, for swing traders. I know that you get markets to do trend, but very often, markets will sit in ranges for a long time. Look at something like Tesla, for example. Yes, you've got many trends there, but very much has been kind of mean reverting up, looking like it's going to break to highs, coming back down again. It's very much been a mean reverting traders perfect scenario. So anyway, back to the point. The point, guys, is this. If you're choosing between the two, then mean reversion is probably the one you want to pick. Now, there is a personality aspect in this. I understand that, and we're kind of not going to go into that at this point now. But from an operational perspective, purely of, okay, what should I get good at? What should be my first step or my kind of real specialist area? In my opinion, it should be mean reversion. Now, it should be a point where you should get to a point where you have multiple strategies that you plug into the right kind of day, because that really then allows you to capitalize on stuff. But if you're kind of just trying to get expertise at something, then forget about the trends for now, because you want many iterations to learn. And the trouble is, if you're trading, let's say trend days, let's assume you're trading intraday trend days, then you're not going to get many of those. If you're getting kind of 2 a month, you've got to wait a long time to get that cycle of learning and to get that repetition. Whereas if you're trading mean reversion, you're trying to find those turning points, you're going to get many of those per week. There might be, of course, there's going to be days where nothing's happening and you stay away from it, but you're going to get many opportunities to put your strategies to the test. You're going to find out the commonality between why price turns, where it turns, what the volume's looking like, what time of day. You start to put this together. So I would say, this is kind of in response to a couple of questions of, okay, I'm trying to find a strategy. Focus on the mean reversion strategies. Focus on the type of things that look for the low and high of the day, and start from there. So start from, what has the high of the day got in common with the prior high, the prior high, the prior high, and see. and then just start to work back from that. What's the low of the day? Now, not saying you're going to get the high of the day or the low of the day every day, but if that's the major turning point, which obviously is, the high of the day is the highest it's been in the day, and the lowest it's been in the day. So if that's the major turning point, what commonalities are there in that market, in the high or low of the day? Print off your chart, whatever you need to do, and see if there is some kind of theme that runs through the rest of the week or the rest of the month or whatever it may be. And then you can start to piece together a strategy. And then you can start to add some of the price action type of strategies, like your candlestick patterns, and not as the kind of things you're looking for. But other things that you might look for are, just your standard candlestick reversals, a double top, a head and shoulders, something that's textbook but in the right condition, the right environment. So mean reversion trumps trending all day, every day, purely because of the frequency of a mean reversion type day. Trend dating is good and it can get multiple profits, but if you are trying to move forward, trying to learn and improve, then mean reversion is the way to focus, purely because of the number of iterations you're going to get, a frequency of occurrences, should I say, you're going to get more and more and more, learning, and become better and better and better in a shorter period of time. And then you can start adding in the trend day type trades. All right, guys, take care. Keep your risk managed, whatever you're trading. See you in the next one. Bye-bye.